Okay, let's unpack this. We're diving into, well, maybe a surprising topic today, given all the talk about energy transition.
Hmm.
We're talking about mined anthracite coal. You might expect us to be digging into solar or battery tech.
Right, the usual suspect.
Exactly. But the market report we're looking at today actually predicts, well, significant growth for anthracite coal in the coming years.
It's definitely interesting. And yeah, our mission here is to really pull out the key bits of information from this specific report.
Hmm.
We want to extract the core data, get a handle on the trends, see what's driving things, and what's holding the market back.
So the goal is to give you, our listener, a really concise, clear picture of the global mined anthracite coal market, where it is now, and where this report sees it going by 2033. Your custom deep dive, basically.
Precisely.
All right, let's jump right in then. The big picture numbers. What's the starting point? The global market size.
So the report puts the global mined anthracite coal market at USD 825 million back in 2025. That's our baseline.
82.5 billion.
Yeah.
Okay. And here's where it gets, like you said, really interesting. The forecast isn't just stability, it's predicting a boost to, what was it?
Get this, USD 1,965.31 million by 2033.
Wow. Okay, that's
Yeah.
that's more than double in what, 8 years?
Yeah, quite a jump. It translates to a compound annual growth rate, the CAGR, of 10.29% from 2025 to 2033.
A 10.2% CAGR for coal. That might raise a few eyebrows. What does the report say is the main driver for that kind of growth?
It points primarily to one thing: increasing industrial demand.
Industrial demand. Okay,
Yeah.
that's a key piece. So let's break it down regionally. Where was the action concentrated in 2025?
Well, looking at revenue, North America was the biggest player, held over 40% of the global market.
40%.
Yep, valued at USD 304,547.20 million in 2025. And it's forecast for pretty solid growth too, an 8.6% CAGR.
And within North America, the U.S., I assume, was significant.
Hugely significant. The report shows the U.S. market at over 24 billion USD in 2025, growing at about 8.4% CAGR. Canada and Mexico were also important markets, around 3.6 and 2.7 billion respectively, with slightly higher KGRs, actually 9.4% and 9.1%.
Okay, so North America leading the pack in size. What about Europe?
Europe accounted for a big slice too, over 30% of global revenue. That's about USD 203,942.4 million in 2025.
And the growth there.
The report doesn't give one single KGR for all of Europe, interestingly, but it breaks down key countries. You've got the UK around 4 billion, Germany close to 4.7 billion, Russia over 3.7 billion.
They all have KGRs listed.
Yes, and they're pretty healthy, mostly in the 8% to 10% range, UK at 10%, Germany 9.4%, Russia 8.2%, France, Italy, Spain, others, all showing similar growth forecasts.
Right. Now let's shift to Asia Pacific, APAC. What's the story there?
Okay, APAC held around 23% of the global revenue in 2025. So USD 1918, 14.4 million. A substantial market, definitely.
But the growth rate is where it really stands out, right?
Exactly. This is where the report projects the highest growth. A regional CAGR of 13.0%.
13%? That's huge.
It is, and you see that reflected in the country data. China, the biggest market there at over 8 billion USD in 2025, is projected at 12.5% CAGR. Japan, South Korea, Australia, all strong growth.
And India. I remember seeing a note about India.
Yeah, India's country's CAGR is the highest mentioned in the entire report, 14.9%.
Wow. Nearly 15%.
And just as a side note, the report mentions some interesting regional details. Sometimes they seem a bit counterintuitive, but we're just reporting what's in the source.
Okay, like what?
Well, it mentions stricter environmental laws in the U.S. and more sustainable energy in Canada as factors. But then it says sales upswung in the U.K. due to a shift toward greener energy. And in China, demand surged due to wanting cleaner alternatives.
Huh. Anthracite as a cleaner alternative,
Uh-huh.
I guess, compared to other coals.
Potentially, yes. Or used in specific ways.
Mm.
The report also mentions things like preference for other sources affecting Brazil, while shifts towards cleaner energy in places like Turkey and Nigeria apparently help sales flourish. It's complex.
Definitely sounds like a mixed bag of influences depending on the place.
For sure. Then you have South America, over 5% of global revenue, about 3.1 billion USD in 2025, with a strong 10.9% CAGR forecast. Brazil and Argentina lead there.
Okay. And the Middle East and Africa, smaller shares.
Much smaller, yeah. Middle East around 2% share, about 3.3 billion, but with a high CAGR forecast of 11.5%. Saudi Arabia and UAE are key players. Africa is the smallest, around 1% share, 1.8 billion, growing at 10.5% CAGR, with South Africa being the main market.
Got it. So strong growth projected pretty much everywhere, but especially booming in APAC.
That's the picture the report paints.
Okay, let's dig deeper now into the market segments. The report breaks it down by grade, mining type, and application. Let's start with the grade of coal.
Right. It mentions three main grades: standard, high, and ultra high.
And which one dominates?
Well, the report suggests ultra high grade coal is likely to dominate the market, probably in terms of value.
Why ultra high? What's special about it?
It's needed for really specialized industries. Think aerospace, advanced manufacturing, stuff where you need super high efficiency, minimal impurities, almost zero environmental effect relative to other coals. Quality can't be compromised, so it fetches a premium price.
Makes sense. And which grade is growing fastest?
That would be the high-grade anthracite segment.
And the reason for that growth?
It's got higher carbon content, burns efficiently, so it's good for demanding uses like steel production, which we'll get to, and also high-efficiency power plants. It seems popular in more industrialized nations looking for better performance and, again, maybe a cleaner burn than lower-grade coals.
Okay, so ultra high for value, high grade for growth speed. Now, how about how it's mined? Surface versus underground.
Correct. Those are the two main types mentioned. And the underground mining segment holds the largest share currently.
Why underground? Is that where the good stuff is?
Often, yes. It's common where the coal seams are deep underground, which is frequently where you find those high-grade anthracite reserves. The report notes it's more expensive and complex, but necessary to get to those valuable deposits.
And surface mining.
That segment's been expanding rapidly. It's used when the coal is closer to the surface, obviously. It allows for really large-scale operations.
More efficient, maybe?
Yeah, often associated with lower operational costs and better production efficiency. The report says it's common in places like North America and Australia, partly due to their geology.
But there are downsides.
Oh, definitely. The report explicitly notes the potential for, quote, far-reaching environmental consequences that need extensive rehabilitation work afterwards.
Right. Okay, grades, mining types. Let's get to the end use. Applications. Power generation, steel production, fertilizer, others. Which holds the biggest slice of the pie?
The power generation segment. That holds the largest market share right now.
Why is anthracite so key for power plants?
Two main things. High energy density, meaning you get a lot of energy per ton, and crucially, low sulfur content compared to other coals.
Oh, the environmental angle again.
Exactly. Power plants want efficient fuel, but they also face pressure or regulations to reduce sulfur emissions. Anthracite helps on both fronts. The report mentions its role in the energy mix and steady development, especially when infrastructure gets upgraded.
Got it. And the fastest growing application.
That's steel production.
Steel? How is
Yeah.
anthracite used there?
It's mainly used as a reductant in blast furnaces. Basically, it provides the carbon needed at high temperatures to pull the oxygen out of iron ore, turning it into iron, which then becomes steel. It's a critical ingredient.
And that links back to the APAC growth we saw earlier.
Absolutely. The report highlights its critical use, especially with steel production expanding so much in Asia-Pacific due to urbanization and industrial growth. Plus, it notes that advances in making steel more efficiently and environmentally friendly are actually creating more opportunities for anthracite.
Interesting. So industrial applications are really central here.
Very much so.
Okay, we've looked at the segments. Let's talk about the broader market forces the report identifies. What are the key drivers pushing this market?
It lists three main ones. First, rising demand for high-efficiency energy sources anthracite fits that bill. Second, overall global economic conditions. And third, increasing advancements in mining technology, making extraction perhaps more viable or efficient.
And on the flip side, the restraints. What's holding it back?
Two big ones mentioned. Strict rules and regulations, which can obviously limit growth or increase costs. And, perhaps unsurprisingly, the overall transition to renewable energy.
Right, the renewables transition. But didn't we just hear the report mention shifts towards cleaner energy, sometimes helping anthracite sales in some places? How does it square that?
Well, it lists both. The transition to renewables is a restraint, but one of the key trends it identifies is, quote, the ongoing energy revolution and global emphasis on cleaner energy sources.
Huh. So cleaner energy is both a restraint and a trend that can sometimes drive demand.
That seems to be how the report presents it. It's complex. Another trend mentioned is just the growing applications of anthracite coal in various industrial sectors, which reinforces that industrial demand driver.
Okay, so it acknowledges the tension, the cross currents. It's not a simple picture.
Not at all, according to this source.
What about the companies involved, the competitive landscape?
The report describes the market as highly competitive. You've got several global and regional players vying for share.
Any standouts mentioned?
It highlights a few key companies as dominant, like Coal India Ltd, Reading Anthracite Coal, and Blashat Coal Corporation. Their strength comes from things like broad product portfolios, good distribution networks, and investing in innovation.
And were there any recent examples of what companies are doing?
Yeah, a couple of interesting ones. In August 2022, the Polish government apparently signed a deal to acquire interests in Polska Grupa Górnicza, or PGG, a major anthracite operator there, as part of reforming their coal sector.
Government intervention.
And in March 2021, Subanthracite Group, a Russian company, inked a long-term strategic partnership with Beosteel Resources.
Beosteel, part of China's big steel group.
Exactly. That deal was specifically aimed at boosting coal exports to China, focusing on injection coal and high-quality anthracite, a direct link between a major producer and a key consumer in that booming steel application we talked about.
Right, connecting the dots there. Okay, we've covered a massive amount of ground from this report. We've got the surprising overall growth forecast, the regional picture with APAC really surging, the nuances of different grades and mining methods, and those critical industrial applications, especially power and steel, plus the market forces and competition.
Yeah, quite a bit.
So if we try to pull all these threads together, what's the main takeaway? How do we connect these dots for you, the listener?
I think the main takeaway is that, according to this report, the mined anthracite coal market isn't fading away just yet. Despite the broader energy transition pressures, it's actually projected for significant, sustained growth over the next decade or so.
But it's not just growth everywhere for everything.
No, definitely not. It's very specific. The growth seems heavily driven by those industrial applications steel, specialized power generation, where anthracite's particular properties are really valued. And geographically, it's propelled strongly by demand in developing and industrializing regions, especially Asia-Pacific.
So it's less a story of simple decline for coal and more a complex picture, a shift in where and why it's used.
Exactly. This report paints a picture of a market with specific niches, strong industrial drivers, significant regional variations, and demand tightly linked to things like heavy industry, infrastructure development, and efficiency needs.
Okay, so the key things to remember are that strong overall growth forecast, the really high growth rate in APAC, particularly India, the distinct roles of ultra-high and high-grade coal, the difference between underground and surface mining's roles, and those crucial applications in power and especially steel.
That sums it up pretty well. It's a much more nuanced story than you might expect just hearing coal market.
This has been a really fascinating deep dive into this market report. We've looked at the surprising growth, the regional hotspots, the different types of coal and mining, and what's actually driving the demand.
So here's maybe a final thought to leave you with. Given this report's strong forecast for growth specifically in industrial uses in certain regions, how does this data maybe reshape your understanding of just how complex the global energy landscape really is,
Yeah.
especially when you put it side by side with that whole necessary transition towards renewable energy, which the report itself acknowledges?
It definitely shows it's not a simple one-size-fits-all story, is it? The energy demand and supply picture for the next decade looks incredibly multifaceted, different sources playing different, sometimes quite specific roles.
Precisely. And understanding these specific market dynamics, like the ones laid out in this report, can give you, we hope, a really valuable and maybe more nuanced perspective as you follow those bigger conversations about global industry and energy futures.